Right, I think we're pretty much live. I'm just going to do a sound check and make sure that that is the case. So if you can hear me, okay. If somebody can let me know, and then we will get going. Good. Thank you for confirming that it's all okay. I hope everybody's had a good day. I finished, I don't know, maybe 5-10 minutes ago, and set this up last night just to make sure that everything was okay and I could just skip from one room to the next and get going from here. So yeah, it's good. I'm going to probably try and do a couple more of these. Typically during the winter, it's a little bit quieter, and that gives me a little bit more capacity. During the summer, it's completely crazy, and it's not possible for me to really spend much time doing anything else other than trading. But when we move into the winter, it just gets a little bit more easier to do that sort of stuff. So I've got some software. I'm not using it at this moment in time, but I will be giving it another go and having a look at messing around with a couple of options and seeing what we can achieve. And I sort of find this format quite handy because there are so many comments that come across on the video that it's actually quite difficult at times to be able to reply to all of them in a timely manner. So you upload one video, you get loads of comments, you reply to those comments, and you're trying to do the next video, and it sort of trundles on. So I'm thinking a live stream may actually be a useful way of answering a few questions. The Casper says, when's the office tour coming? I will do one of those videos. I have done a couple of little bits to test out how I should do that. But this is a different room today. This is effectively the boardroom. My son sits here at the moment. Whoops. And yeah, the desk that you normally see me located at is out there. Below us, we've got some more facilities. You've often seen me standing next to the bookcase. That's where the big TV and other stuff is, and the sofas. And then we've got a boardroom here as well, which we haven't used actually because everybody's in lockdown and nobody's coming at the moment. So my son has occupied this part of the boardroom at this particular moment in time. The just having a look at any of the questions that we've got coming up here. Somebody asking if we're considered doing a podcast. I have thought about that. I think it needs a bit more interactive though. Probably needs 2 or 3 people involved in that. Always the problem that I have is that finding the time to do these things properly is always the difficult bit for me. I'm quite interested in trying to help people out and get content out there, but I tend to find sort of getting all of that organized is probably the biggest struggle I have every week. So during the summer, it's incredibly hard, but at this time of the year, it's a little bit easier to be able to spend some time doing some proper educational stuff. So hopefully you'll get to see a lot more coming out, and we will play around with this format as well to get a handle on if we can improve this and do a couple of other things. I think maybe somebody interviewing me or discussing topics with me may be an interesting way to take it, because then they can ask questions and dig a little bit deeper on certain points rather than just have a sort of one-way conversation, as it were. George says, what's coming on the 156 version? Lots. I've been using it today, actually. So we've been playing around with the prototype at the moment to cross-check it and make sure that it works and that there are no bugs that we are aware of. So I've actually been using it, but you're going to have to wait until you find out what's in there. We're always looking to introduce new features, and sometimes we have to introduce steps to get to the next level as well. So keep your eyes out for that. That should be around, be an early Christmas present for you, I should imagine. Right. What I'm going to do is there are a few questions coming in here on the live chat, but I do actually have some questions that people came in and asked for earlier. So I'm just going to bring those up, and we're going to answer some of those questions directly. And it's interesting because very often people ask similar sort of questions. And, you know, one that was most liked from the comments on the video that was a precursor to this was, in your opinion, what's the biggest influence on price of any horse in your opinion? What factors provoke price movements and so on and so forth? And I think it's probably the most common question that I get asked is, what causes the price of a horse to move? But you've got to answer this in a number of different ways, because there's never one particular factor. When you look at the way that racing develops, there was a good example today in the Betfair Chase, Bristol de Mai. When you look at its form stats, likes heavy ground. So when I looked at that race today, I was thinking there are a number of factors that could lead me to do a trade on that particular race. It's a good example of this, actually. And when you look at the form, you could see that most of the times that that horse has placed or won has been on heavy ground or soft ground. And as a consequence, you can look at that and you can sort of say, well, this horse, if the rain comes, then it's probably more likely that that particular runner will be backed. But then you run into this problem of, is that already priced into the market? Are we actually seeing that that activity is specifically priced into the market already? How do we know that? Because you're looking at all of those runners, and I say all of them, there are only 5 today, which makes it quite a nice market to give as an example. It's a bit easier with 5 runners, but you can actually see how the market is beginning to discount that information and whether you think that the market is discounting it. Because actually, when you looked at Bristol de Mai today, the price was sort of gently drifting a little bit, but in the last period before the race started, then the price did eventually come back in. So regardless of whatever process you're using to forecast that, you really have to look specifically at what the market is doing at that particular moment in time. So most of whatever you discount or however you try and look at stuff, fundamentally speaking, especially on racing that's pre-off racing is an opinion-based type of trade, you have to look at that and you have to sort of say, regardless of whatever research or process I've ever done, what actually is the market telling you? What are people actually doing within the market? And that brings into play another aspect of it all as well. So the problem that we had today, you probably saw me moaning on Twitter, I moan on Twitter all of the time, was that there were lots of races today. So the problem that we had today is there was one race and then another, and they're all bunching up next to each other. And we had Lingfield that was basically just in front of Haydock. So the problem that we had with that is the later that Lingfield went off, the less time we had for all of the real money to arrive at Haydock, and that was a bit of a pain. That was a bit of a problem in terms of it wasn't really allowing us enough time to see exactly what people were doing. All of that activity was sort of compressed. It was sort of crushed into the final few minutes before the start of the race, when loads of money would arrive, and that was quite likely to change your opinion in terms of what was likely to happen. So it was really, when you're pre-off, trading racing pre-off, you're predominantly trying to just understand where that flow is. It doesn't matter what sort of information that you look at. You have to be careful not to use that to justify a position. So, a good example I can give you of this is somebody came to see me once. He was a horse racing expert. He was interested in trading. So I sat down with him and showed him a trade. And what actually happened was he was going, oh, why are you backing that? And it's like, well, because I think it's going to be backed. And he gave me this long list of reasons as to why this horse couldn't win the race. And I'm going, regardless of all of those wonderful reasons that you've given me, everybody's backing it. And he's going, well, I would lay it. And it's like, no, you would lay it because you don't think it's going to win the race. But we're not concerned with that. We're primarily concerned with what's the opinion of the market at this moment in time. So predominantly, when I'm looking at the ladders, I'm looking for that money to come into the markets to form a true opinion. So regardless of whatever you think, then you have to trust what you see in front of you, what the market is predominantly showing you. So if you see something being heavily backed, you will see that some money comes into the market, the price sort of tends to wobble around a little bit. And then the price will jump down again. So you can see that there's pressure on the price to come down. And then you see it do it again, and then it wobbles around a bit, and then again, and then again. So you sort of think, well, okay, you know, people are backing this, people like this. And then when that activity starts to dry up, when it gets weaker and weaker, you sort of think, well, that's gone far enough, and then the price is going to be heading back in the other direction. So you have to be, you know, you have to look for indications as to what is going on, and you have to come up with some sort of idea as to how you think the market could play out. But the most important thing is looking for evidence that that is actually the case, because it could have been perfectly possible to make a correct judgment today on the fact that who was going to win the Betfair chase, and that Bristol de Mai would like the ground and would probably perform better today. But ultimately, it was all down to what was the market doing at that particular moment in time. Was it discounted into the market? Are you seeing evidence that people are really going for that story or not? So you need to join in those two bits of information. So we had this runner the other day. I'm trying to remember. I can't remember which race it was on. I can see the graph. It's funny. I can see the graph in my head straight away, but it was incredibly heavily backed. And it came all the way from sort of 15s, 20s, all the way down to odds of 3. And at that point, it started to stall. So I was thinking, well, okay, you know, the trade here is not for it to go plunging right through, because I can see that all of the activity is stopped. But I would expect the price to start heading back up again. But at that particular point, I jumped into the market, and as the price started to head up, they kept on backing it, and they kept on pulling it back down towards 3. So I ended up earning pretty much 0 from that trade. I probably earned a small amount, but to all intents and purposes, a 0. And yet it had been backed in from a very high price to a much lower one. But I figured out I'd already missed the move already, and I was looking for the price to rebound in the other direction. But the fact is, it didn't happen. So you have to be careful about extrapolating trends. You have to be careful about extrapolating information, and you have to set up a series of things that you want to see before you will actively trade. But when you actively trade, then you have to understand if what you're seeing is what is actually, or what you think is going to occur, is actually occurring in the market. Because too many people pin their hopes on some system, some process or whatever, and then rather than seeing something that contradicts that, they just plow on ahead and sort of somehow think that they're better than the market. But I can assure you the market knows everything, even stuff that you don't know and that may transpire at some point after the event has settled. So you have to trust the market. You have to look at it and you have to say, well, you know what, this is what I thought isn't happening. So, you know, either I've got it wrong or I'll change what I'm doing. But my advice to you is that you go into a market with a particular setup, you look for evidence of that. And if that doesn't exist, then you abandon that trade, or you wait for that opportunity somewhere else. You don't suddenly change your opinion, because it's a very hard thing to do. Because if you let the market change your opinion on what you're looking for and what you're doing, then it's bullying you, and you'll probably end up on the wrong side of that. So it's much, much better to come up with a list of things that you're looking for, and then actively participate on that market. So I didn't actually get a decent result from, I made a small profit on the Betfair chase today, but I really thought that we would see some money for Bristol de Mai as we approached post time, which we did see. But the problem that, you know, I sort of got that right. I could see that that was happening within the market. But the problem that we had was Lingfield only had 3 runners loaded in the race just before the feature. And as a consequence, I couldn't really commit decent money into the Haydock market, because my concern in a market that isn't flowing fully is that if you make a mistake, you can't get out, or you can't get out without taking a decent loss. So that's part of my entry criteria, is having the liquidity there, because if the liquidity is there and you make a mistake, you can dump your order and you can do it at the current price. But if you're in an illiquid market and you make a mistake, then you're going to be scrambling around to try and exit your trade, and you won't be able to. You're going to end up chasing the price out against you, which makes the trade worse, and you're going to lose money, and it all goes horribly wrong. So in my little criteria of things that I need to be able to trade confidently, one of them is liquidity, not volume, but liquidity, the amount of money that's getting matched per second, because that tells me that if it's all gone horribly wrong, I can just go, you know what, I've messed up, I'm out of here. And then you move on to the next market. So the problem I had at the Betfair chess today that was one of my worst results of the day, was that just wasn't there. And I generally got the market mood and feeling and the structure right, but it was too late for me to do anything serious on that. And so I just didn't really push it. And as a result, I didn't really get much from that race today, which was really disappointing. But we have Lingfield to thank for that. So thank you, Lingfield, for messing that up today. But actually, I did all right overall today. I did better than I imagined I would do today. Let's have a look and see if there's any follow-up on what I've just been talking about there. Somebody asking about the difference between Bet Angel and other products. That huge difference between what you see in Bet Angel, automation. We're constantly updating Bet Angel, so anything that you saw last year has probably changed between this and next year. But my advice to you, if you're looking at evaluating software, is just download a trial of Bet Angel. We've got two versions. One sort of is got all of your basic trading features, and the second has all singing, all dancing. I'll make a cup of tea, I'll take the kids to school and do everything for you. So it's better that you experience that. And I think the problem that you have with Bet Angel Pro is there is a lot of stuff in there, and it will take a bit of time to get used to it, but it's worth the effort, is my advice. Frank's asking when the beta is being released of the next version of Bet Angel. We're at the final prototyping stage now, so fairly soon. I can't confirm when because we don't know at the moment. John is saying, do you use in-play GPS API? No, I don't. We have looked at it, and maybe it's something we do at some point in the future, but at this moment in time, we don't. Callum saying, do you think Betfair should come out with better graphs? Yeah, they should do. Well, the Betfair graphs have been broken for some time, and they haven't fixed them. But I tend not to use them. I'll look at them to get an idea of a longer term trend and situation. But specifically, I don't tend to really go into great depth on them. I tend to use the Bet Angel advanced charts. And that's not a pitch. That's what I tend to do because they have more granularity and they're more relevant as well. Lee's saying probably a rubbish question. No questions are rubbish if you're starting out, Lee. But he's asking if there's a preference to back or lay first with regards to liability. And the reason I picked up on this question is this is a common mistake that people make because they've got small banks. They try not to lay first because it involves taking a higher liability on the trade first. But my advice to you is ignore that. You have to totally ignore that and focus on the trade. Have a bank that's big enough to trade at the stake levels at which you're putting into the market, but ignore any of the liability stuff. I'll be interested to see what the camera looks like on this because I have alternative software that will bring across, I think, a slightly higher resolution image. But we may try that on the next live stream. Let's have a quick look here. Paul has made quite a valid question here. He's saying, as you know, you must have an entry and exit plan. Have there been times when you're at a loss and you think it'll go the other way and it doesn't, or do you stick to your plan and exit? Generally speaking, unless if there's really, really strong evidence that a position is about to completely reverse, I will just basically actively go in on a certain position. And if it doesn't work out, I will exit it to the best that I can. So even if that's at a loss, I prefer just to say, well, you know what, I got that wrong and there will be another opportunity. That's the way that I prefer to do it. The problem that you have if you try and reverse your position is, again, I'm always warning people of this. It's very important that you don't let the market bully you, because if you feel that the market is forcing your hand, then you lose control of your trade. So I'm much more likely in a position that if it's going wrong, I will just basically just not do it. I will sort of stop and exit the trade as best as I can and then go again if I can find an opportunity. If you try and flip your position, then you're looking for the opposite of what you started with, and you're very likely to make a bad judgment. So that's typically not how I would trade. Andy, hello Andy, says, what do you expect to see in the markets when punters load back on course? I don't know is the honest answer, because I'm not sure what I've seen without them there. Immediately after we came out of lockdown, there was a huge spike in volume and liquidity within the markets, but that sort of slowly started to fade away to the point where the markets now are probably a little bit weaker than they were at this time last year. So I'm sort of thinking, you know, at the big events, I can tell that the lack of crowds has influenced the market, because if you get a low, if you have 30,000 drunk people at a major race course, and a bit of a gamble developing within the market, you know, those situations seem to be driven by the activity on the day, the crowds, and all of those things. But we haven't had that benefit this year. So Royal Ascot this year was fine, but it just wasn't very interesting. It didn't, nothing, you know, there was no oomph in the market. But there does seem to have been a sort of a bit of a tail off. So I'm sort of thinking, if crowds go back, will it start to lift? But of course, that's masked by the fact that most of the midweek racing never see any crowds anyway. A crowd at Wolverhampton is 2 men and a dog. But at an Ascot or some of these major meetings would significantly benefit from having a crowd, I would think. So yeah, swings and roundabouts really. The lack of crowds hasn't affected courses where there's generally a lack of crowds anyway. But maybe during the bigger meetings, it may have been significantly more beneficial. Let's have a quick look at this. Callum says, the biggest problem is me getting twitchy at every tick of the market. My advice to you on that, because this is what happens to a lot of people. So I remember experiencing this. I wrote an article for Shares Magazine. It must be good 15 years ago now, where I was talking to people about the philosophy that you needed for a longer term investment. And the problem that you have, especially with modern technology and the stock market and foreign exchange markets and Bitcoin and all of these things, is that everybody is looking at the price, and you know they're consistently checking the price every 5 seconds. And as a consequence, you get good and bad experiences. You get negative and positive experiences consistently. And as a consequence, one of the issues that you have is that it constantly is forcing you to reappraise your position. So it's typically better just to close your eyes almost. You would sort of, if you invest in, this was the thing that I learned, if you invest in shares, you don't really care about what's happening in the short term. You're more worried about a longer term time period. So one of the things that I would often suggest to newbie traders is, rather than getting it refreshing at 20 milliseconds, maybe get it to refresh every second, and then you'll feel a little bit more comfortable, or just look at a slightly longer term time frame. Some of this can depend upon the strategy that you're trying to deploy, but widening your time scale will reassure you that in fact, you know, the market isn't always going to go against you. Sometimes it will go for you without you even having to do anything about it. So I firmly believe that the amount of profit and losses within the market are limited by the shape of the market, and you have to work within that. And once you understand that, and you understand that this is the average sort of range that you've got, and the price is going to bounce up and down within that range, your role really is to decide where you are within that range. Try and take positions that work more favorably within that particular range. So, you know, if you see the price moving up off of the bottom of a range, you're sort of thinking, well, is it going to ever break the bottom again? So when you watch me on a lot of the videos, you see me feeling sort of quite relaxed about positions that I've got. And by spreading out entry and exit positions, what I'm doing is I'm sort of padding out my entry point and my exit point. And that makes me feel a lot more relaxed about the trade, because I know that all of the whipsawing that the market does will actually work in my favor and not against me. Whereas if you're utterly reliant upon the price moving one tick above or below where you are, then as it moves against you, it can panic you and force you to push you out of that position within the market. So yeah, try and expand your timescales. One of the earliest experiments I did was I just sort of backed or laid sort of randomly or to some defined criteria, and then just watched the market. And I've recorded a video that does this, which I will upload in the next 2 or 3 weeks, to try and teach you how to think about the way the market works in the short term and how that influences things longer term. So it's important to come to terms with that, and you'll realize that in fact you generally don't have much to be afraid of if you're doing roughly the right thing. And it's all more about how that trade will play out given a number of scenarios rather than the tiny little movements that you get. I'd say that the market whipsawing is the thing that catches the vast majority of people out. Let's have a look. Yeah, it was Bushy Park was the. I'm glad that somebody has pointed that out. It's Bushy Park was the thing that was gambled in massively the other day and won, of course. Yeah, somebody's saying the camera quality could be better. I'll do another live stream soon and I'll fix that. I'll use some native streaming rather than what I've got here, which isn't native streaming. But I'll check it afterwards. We'll check and see what the quality's like. The stream is being recorded and will be available at a later date. To answer a couple of questions here. Joe is saying it's 3 a.m. in Australia. Hello, Joe. For once, I'm on UK time recently, but maybe I'll do a live stream at a different time of the day to include people in Australia. That may be an option, actually. JJ is saying, will you ever release a book? Possibly. I've always had this opinion that a book is something you write at the end of your career. So there's still stuff that I learn, and I'm still setting new records. So I've busted a few records in recent years. So it still feels that like I'm on the up. It doesn't feel like I'm at the stage where I've learned everything that I can learn. But it's probably something that I will do at some point. Again, it's really more about finding the time to do it. It takes a lot of effort and time to do that. And I have tried to document stuff as I go along, but it's actually quite difficult to put it into a format that's publishable. But that will happen at some point, I should imagine. I noticed before I came on the live stream, and there's another comment on here, there have been a lot of people saying that they've had their accounts closed for one reason or another. I have written a blog post on this with all the reasons that Betfair could possibly do this, and there are some valid reasons. But if you do find yourself in that position, you can appeal, and as long as you haven't done anything stupid, then Betfair will reverse the decision. I don't know why I'm seeing a lot more of these all of a sudden, but I have written a blog post about it, so I will park that comment, and you can read in the blog post all my thoughts about that and the way that it's managed. But it's normally to do with either calling the API too frequently and not placing enough bets, or some variant therein or thereof of that. We had somebody come forward the other day that somehow had placed 150 million transactions on their account, but had done very little activity. We have no idea how they've done that. We're speaking to Betfair to figure out how that is possible, but they seem to be picking off some of these outlying accounts. But I have done a blog post on it, so have a read of that, and we can cover that in more depth. Somebody says here, any plans on quickly adding or removing ladders without going via settings? You can do that already. I don't know. I'll follow up on that at some point, but you can do a lot of things in terms of adding and removing stuff really quickly. If you right click, you'll find that you can spawn additional ladders on different markets and stuff. I don't know if that's what you're looking for, but you may want to check it out. Callum's talking about Betfair pulling out of New Jersey. My take on that, I actually predicted that they would pull out of New Jersey because Betfair have never really gone for it in the US. And one of the issues with that is it's been a sort of half-hearted approach, so they've never really been able to grow significantly there. I actually offered to try and help them in New Jersey in terms of I would be willing, while I was over in the US, to go and talk to people and stuff, or do, but that they never took me up on that, and they never really put their foot down in the US. And when they merged with Stars Group, who have a huge presence in the US, I think it was inevitable that they thought the exchange was a bit of a thorn in the side, and because it was so small, they could justify just, you know, pushing it to one side because there were other elements of the business that were more important. This is one of the disadvantages of being a large corporation, is that those things happen. In my former life, I've been on the thick end of that. So the problem is it's the corporate imperative overruling sort of what would make sense. So I think and in fact, I know other people are going to step into their shoes. So yeah, we're going to keep an eye on that for you. There have been a few questions. I'm just going to quickly look at the most liked questions again and make sure I work down that list. But there have been a few questions on automation and manual trading, so I'm going to answer some of those. Let me just have a quick check on, yeah, there's been a few that have appeared at the top of this list here. So let's answer a couple of those questions. Now, when you look at manual and automated trading, I originally started, as you probably know, as a completely manual trader. And there's plenty of opportunity to manually trade. So I was doing that today, but I also have automation running in the background as well. So it's supplemental to me. I find that both things work particularly well. And when people say what percentage of manual versus automated, it's sort of not a fair question, really, because obviously when you're manually trading, you're sat in front of your computer and you have to sit there and poke around and do all of those sort of things. But when you do automation, you don't have to be there at all. So automation runs pretty much 24/7 for me. There's something going on at some point. So while I'm sat here talking to you, I could just hear out the corner of my ear my automation reporting on what's going on at Wolverhampton. So it just made a loss on that last race at Wolverhampton, I could tell. And I'm sort of itching to go and see what it was. But because automation can run 24/7, automation is always going to yield much more than you can trade manually. And that's just a function of its scale and scope. So you can't sort of really pin a figure on it because they're two different ways of operating. But I think the interesting thing about automation is you will probably discover things that you never could do when you were doing manually, because automation for me started out as a sort of a test bed. We're going back a long way here because we put Excel in an Excel link into Bet Angel maybe 6 months after we first created it. And that was my early bits of data gathering and automation. That's what we used it for. But what you tend to do is you tend to run experiments that test certain aspects of the market, and then that develops into automation of its own. But it also can end up being you know, something that influences what you do manually as well, because you may discover something that you hadn't particularly seen or been aware of before. But you can end up in completely opposite ends of the spectrum. So when I start with a simple strategy, I'll sort of branch it out. So I'll do one thing and I'll create a modification of it that does something else. And then then I'll branch those again, and then they often end up at different ends of the spectrum. So I've got some automation that just sits and waits for the perfect moment before it does something, and some that just throws a few orders in the market and carefully manages those things. But they're two totally different strategies at opposite ends of the spectrum. But generally, the process for creating automation probably starts manually. You've got an idea, you test the idea within the market, you automate a small part of it, and then at some point you branch it out, and then that lives and starts to operate on its own, and then you sort of take it forward from there. But the way that we approach it from a product perspective is that if you're trading manually, then you can probably improve your trading by introducing something like a servant, so by introducing semi-automation. So, for example, if I'm trading very actively and on a market that's very busy, if I click manually and the order hits the market, then if you introduce a servant to qualify that particular trade, there may be certain little things that you can do, such as checking the exact moment at which you hit the market and the condition of the market at that point, that you can do a lot better if you apply that trade with a servant. And if you do that, then you'll get a better quality position into the market or out. It can take you out of a position in the same way. But when you do that, then you realize you're only a little step away from actually being able to fully automate it. So you gradually progress and develop stuff on its own, but I'll have stuff running consistently. So this evening at Wolverhampton, while I'm chatting to you here, I've got four bits of automation running, all doing slightly different things. And sometimes you discover stuff that you would never do otherwise. So I created some automation once that did completely the wrong thing. I accidentally applied it to a market, and 5 or 6 markets after I finally discovered that it was doing completely the wrong thing, it had made a profit. And I was thinking, that doesn't make any sense. So I have now named it the strategy that should not work. And it now runs permanently, doing stuff that really should not work, that I'd never thought of. And it was just a complete accident that I discovered it. And that just runs constantly, and it runs day and night because it does the same thing on Australian racing as well. So I think as part of your mix, it's helpful, because the thing that you benefit from, if you semi-automate, you can do very precise trades and get very good feedback on those trades. If you fully automate, then you scrub away all the emotion, the ambiguity, and you just get pure feedback from the market. You can't sort of kick yourself when you sort of think, well, I really should have done that. But the automation is a very useful way of getting pure quality feedback from the market that will give you really good guidance. And you can use that to develop further the automation that you've done, or to influence how you trade manually. It's a very useful way of progressing things. But yeah, obviously the automation side of Bet Angel has improved dramatically over recent years, and that has helped take my trading up another level as well. So I think it's something that you should necessarily look at, even if you don't use it directly or in isolation. You could probably find a way of using it to beneficially help you. We've got a greetings from Mexico. Hello, Mexico. Thank you for joining in today. I had a friend who lived in San Diego, so I have explored Tijuana and Baja California and all of that region extensively. So yeah, and it's interesting that in Mexico Betfair is legal, but you cross the border and it isn't. A few questions here asking about if I'm doing cryptocurrencies. Generally not, simply because they're too volatile, and it's difficult to assign a true value to them. It doesn't mean that I'm not going to do anything in the future, but I'm able to do them by proxy anyway. So I have done a video actually on Bitcoin where I was talking about how I took advantage of that opportunity. So you may want to watch that one. There's a good question here, actually. What would you do if you were CEO of Flutter to increase market volume on the exchange? I would split out the exchange, because the problem is when you merge stuff together, you change the imperative. And the exchange for me is a disruptor, or it should be a disruptor. And it was there to change the landscape completely. Whereas the problem that I think we've had in recent years is that that has not really particularly been the case. We've sort of slipped backwards a bit. That initial drive has gone. So if I was CEO of Betfair, Flutter, whatever you want to call them, split out the exchange, make it live or die on its own, make it the disruptor that it once was. Chris has asked a question here about sort of more or less is, why do I bother with the software if I'm making money trading? It's a very common question that I get asked. I make a lot of money trading, much more than I think people would imagine. And the software was created to trade. So we had back when I started, first of all, the software, no software existed, so we had to create software to trade, and that has developed on its own path since then. But trading is still very much the reason that I turn up every day to do stuff, and that comes first. That has priority over everything else. Do you ever combine markets in horse racing? Generally not. So I don't combine win-place markets and stuff like that, simply because everything's driven by the win market, and there's not enough liquidity, not for me anyway, in some of the smaller markets. So I don't tend to do that much on there. Joe says, have you ever noticed some stable gambles present a trading opportunity? I think is what he's trying to say. Yeah, although the funny thing is I had this discussion with a Bet Angel user the other day, because he sent me a couple of little messages saying, I noticed your comment on this and that. And he said, this is a yard that I watch consistently. But I think that he's probably better at spotting those than me. I've done the analysis, but I can't particularly spot it that well. But I know that some people do trade like that. But I tend to just look for evidence of what the market is doing at that point. So I see a gamble. I don't try and predict it. Paul says he just made a profit at that Wolverhampton race. So thank you, Paul. You probably created the loss for me. There are a few questions here about the difference between Bet Angel and other software. It is substantial, and over time it's getting wider. But sort of really, I think the live stream should be devoted to asking questions around trading and not specifically the software. I can do a video. Maybe I should do a live stream talking about the software where people can ask questions. I think that may be a good thing to do, perhaps. We've got lots of questions coming in. There's a question here, a general question, which I will address. But in fact, there's a couple of things here, which are probably prompted by me talking about automation. And the questions go along the lines of what automation to use, how simple is the automation, how many rules per strategy, how simple is it, and all of these sort of things. I'm just going to cross-check the questions that came in earlier to see if there were similar questions there. Yeah, there were a few similar questions. So I'll try and broaden the answer out to cover all of those things. If you look at, so go onto the forum and you will find a list of hundreds of different bits of automation. And when you look at all of these different bits of automation, they all perform very specific things within the market. So the concept of providing those templates and all of those, all of those examples is that they all perform specific functions within the market. So if you run one of those bots across every single market, what you will find is that it works in some markets and not other markets. But the idea behind putting all of those templates up there are for you to take those templates and deploy them into a strategy that you create, because your role as a trader really is to identify a market where you will deploy a strategy. That's your key role. If we look at the Betfair chase today, it was a 5-runner starting at 264, somewhere around there. But if you look at some of the other markets today, they were very different. There were some very low-grade handicaps. There were some maidens. There were some unraced horses. There were some horses that were maidens, but had raced frequently. So each one of those races is going to exhibit a different characteristic. And when I looked at the football today, there were some matches that were going to have a low number of goals and some that were going to have a high number of goals. And your role as a trader really is to put the correct strategy, and that it could be automated, into the correct market. So you should actually have a suite of strategies, and then you deploy them differently according to what you expect to see. If you try and apply, probably the hardest thing to do is to apply a generic strategy that just generally prints money. I know there are loads of ebooks and websites out there that will promise you that, but as a professional trader, I can tell you that the market does not work like that. The way that the market works is every single scenario is slightly differently, but they do have sort of repeating patterns. So if I look at a race that's going to take place tomorrow and there's a moderate amount of liquidity in there, I can tell you pretty much how that race is likely to trade. Now, because we're sort of 12, 24 hours out from when that race is going to take place, my judgment will be quite broad. But as we get closer and closer to the start of the race, I will get more and more certain about what is likely to happen. But you can make those judgments. If I look at a card of racing, I can tell you pretty much how the day is likely to trade. Most of the early races tend to be maidens or novices, or nurseries perhaps. And then as we move into the middle of the day, you get more competitive handicaps. And at this time of the year, you finish with a bumper. So each one of those races is going to trade slightly differently. So it's never a question of saying that one thing is more effective than another. Your role as a trader is to actually deploy the correct strategy into the market to make it work. So if you look at the way that I traded today, each one of the races I would have approached slightly differently. They all have different characteristics, and I would adjust for that. But also in the example I gave you with the Betfair chase, I sort of knew what was going to happen, but I couldn't do anything. So you have to sort of take account of things from there. But if you think about the way that the automation works, it's very beneficial. It can look at things 50 times a second, whereas you can probably react in 1 or 2/10 of a second. So deploying or using the automation to enhance your trading to improve the quality of the entry or the exit or the information that's being displayed is hugely beneficial. So the way I could tell you that I'd lost at that race at Wolverhampton was because the automation played a noise. So I can actually tell what it's doing even while I'm sat here. If it thinks I need to intervene and the alarm goes off, I will dash off and run over there to have a look at what's going on. But I'm hoping that during the live stream, everything is nice and calm and it just reports an endless stream of profits, but not on that last race, it would appear. In terms of how simple or complex the automation is, some of the best things, and this is goes to some of the comments that arrived prior to the live stream, people underestimate how doing simple things really well works so effectively, because ultimately, if you can pursue a strategy that is quite simple, then you can probably refine it a little bit further, or execute it slightly better, or find opportunities and be more confident about those opportunities. So I think there is a tendency sometimes to overcomplicate trades. And I often see this when you look at football. People are sort of saying, well, if this, then that, and then if the moon is in conjunction with Uranus, then do that. And I'm thinking, well, no, it's that's far too complicated, and half of this is completely irrelevant. So you have to drill it down to a very simple set of rules, and then you can sort of layer stuff on top of that to make it slightly more effective in terms of the execution of those situations. So yeah, you can. What tends to happen when you do automation is you come up with a simple rule. So you start with something that says, at this moment, do the following, and that is your initial rule. And then you sort of say, well, at this moment, subject to that, do this. And then you sort of say, well, subject to that, do this, but maybe, adjust for this particular characteristic. And as a consequence, simple rules can sort of grow arms and become a little bit more deeper and more complicated. But most of that is, just refining it. So every single strategy that I've ever done, that I've ever started with, has been along the lines of, this is what I want to achieve, and this is how I want to create a profit. Off you go. And then I analyze in great depth all of those things, and I look to see where it went wrong. And you find that when you do that, it generates lots of profits anyway, but it also generates lots of losses. So my primary focus there is to try and enhance the profitability by reducing some of the losses. So there may be certain markets, whether it's football, tennis, racing, anything, where it consistently seems to struggle. And therefore, I'll either amend the automation to minimize that, or I just won't put it on those markets. And then by default, you automatically start to make it profitable. So yeah, you need to start from a simple basis, but then you probably want to tweak and refine and fine tune elements of that to take it up to another level. So it doesn't have to be complicated, but sometimes you do end up with stuff that, looks a little bit verbose when you're actively doing it. But, things that I'm looking at, I'm just looking at the structure of the market, trying to understand how that's going to influence what happens within the market. And then the automation may or may not do that market or adjust its behavior based upon what it's likely to see. So yeah, there are lots of areas that you can refine specifically in there that just generally improve the yield over a bit of time. Francis says, and this is a coincidence because I sort of just answered this, do you have different strategies for different race types, handicaps, maidens? Yes. And because I've just answered that. If you look at the way that everything is structured, if you think about it logically, if you get a very competitive handicap race, then so look at the Newmarket Cambridgeshire, for example, that we had not so long ago. Massive field, 30 runners or so, all of them sort of equally weighted and of the similar or same quality, or certainly they've been adjusted for that according to the weights. And as a consequence, nobody in that market knows, you know, that there is really a strong favourite. So the market sort of flip-flops and meanders around all over the place, and it doesn't really have any firm direction. That's what you'd expect in a market like a Newmarket Cambridgeshire. Now, if we go to a race that is a maiden, for example, where there are no horses that have been raced before, but the word on the street is that the favourite has come from a good bloodline and it's trained well and all of these sort of things, then you may see a little bit of a gamble develop on it. And people seeing the gamble develop on it, they look at the form line and think, well, it has no form, so somebody knows something. And therefore it extends from there. So your approach to each of those individual markets should reflect that. If you can understand a little bit about racing and the structure of the market, that will give you a steer as to how the market should behave. But you know, if you have a competitive handicap at Wolverhampton on a Thursday evening, you'll probably find it's the same horses that ran last week, but a different one's going to win this week. So that market's going to behave very differently from a much higher quality handicap. So that confuses people now and again, but you shouldn't necessarily adjust things. So I can tell you, for example, the automation that's running this evening, the stakes have dropped right down because it's Wolverhampton on Saturday evening, and I know that those markets will be weak. So one way of managing the risk on that is to bring the stake right down. So if it's after a certain time of the day, or you know, certain, for example, Wolverhampton, then on a Saturday evening, I just know the market's going to be weak. Tomorrow, being Sunday, the amount of volume going through the markets is much lower than a Saturday. So it adjusts based upon the fact that it's a Sunday. Lower volume means it's easier for prices to move, which makes the market a little bit more volatile. Somebody's asking, I've had quite a lot of questions about Football Index. I have heard about it, and hold on a second. I've just accidentally jumped forward slightly here. So I'm just going to scroll back for a second. Here we go. Yeah, people have asked about Football Index. I'm not active on Football Index. The way Football Index works is you can buy and sell players, but you also get a yield. So it's a very unusual type of betting model because it's sort of more similar to an investment model in terms of where you could potentially get a yield. But I haven't really done much on Football Index, so I can't comment authoritatively on that. Tom says, do you concentrate on one sport at a time, or do you let automation work in the background while you concentrate on one thing? The latter. So I tend to put automation on something, and the important thing is don't interfere when you do any automation, even if it's semi-automated. The problem you will have when you look at automation running is you'll look at it and think, what's it doing? And the overwhelming temptation is to intervene and jump in and press a button. But you've got to let it run. You've got to let it have complete autonomy. So I will let something run. So on Monday, for example, I will look at last week's data. I will make any modifications or tweaks that I think are necessary. And then I will let it run for another week when I'll look at the data again and think, that didn't work, that did work, and then tweak it again. There was a question that came in on the video that I did prior to this, on the comments is the word I was looking for. that was sort of asking a similar sort of question. In fact, let me just see if I can find it. Let's check it out. I've lost it. I can't. It's funny. It's for the split moment there that I've remembered what it was. I've gone to search for it and I've forgotten what I'm searching for. Such is life. There have been quite a few questions, and I spotted a few looking at that list about emotional stability and trying to cope with losses. The thing to remember, and there was a question here about an in-play strategy. Somebody was saying, you know, I've seen somebody post an endless string of profits on in-play. And the thing to remember about in-play is that, say you lay something at 6, it's got an 83% chance of that bet actually being successful, because you're laying at relatively large odds. That represents 16–70% chance of that overall event occurring. So if you trade, that's going to significantly bump up your overall strike rate. You can look like a genius if you choose a strategy that has a very high strike rate. You can do the same. Think about it when you're trading pre-off. This is the average range within the market. If you go for a 1-tick gain within that range, that's going to be a tiny, tiny slither of that. And as a consequence, if you're going for a profit this big in a range that is that wide, then you're going to naturally have a high strike rate. But you're actually not concerned with that. What you're more concerned about with is the loss when it goes wrong. So in my manual trading or the automation, I'm primarily interested in what is the potential for loss. That's the thing that I search for straight away. I come up with a brand new piece of automation. I let it loose. It goes off and does all of this stuff. But if it wins very, very frequently, I'm disappointed, because I'm actually interested in what is the potential for loss. So if you have a very large traded range and you're going for a small profit, you will always get a high strike rate. So if we go for a 1-tick profit pre-off or in play, we'll get a very large potential profit. But when you're looking at pre-off trading, you're going to have a range like this, but when you're doing in play, it's going to be that big. You've got 450 ticks from 101 to 1000. And if you position yourself in the market where, you know, if you look at a horse race in play, there's only one potential winner, excluding dead heats and so on, then the average movement that's going to move is going to be significant. It's already going to have an 83% chance of creating that move at 6, and there's going to be a large number of ticks above it. So you will win very frequently, but it doesn't mean you're going to be profitable, because your profit overall will be determined by the losses and how big they are when those losses come in. So the advantage with pre-off trading is that even if you trade at random, it's going to be roughly 50-50. You have to trade within that frame, and that frame will define your long-term positive expectancy. So that's why I always prefer pre-off trading, because you can limit the largest loss that you potentially have. And if you trade totally at random, you'll get a 50-50 strike rate. But if you lay something in running at 6s, you're going to get an 83% strike rate. And if you offset it by a few ticks, you're going to be up in the 98–99%. I have done a video on it. I should probably link to that video to give you a full explanation, because I have spent 10–15 minutes doing that. So yeah, you take much more risk in play, and it becomes result dependent. Whereas pre-off, it's result independent. It doesn't matter what happens in the underlying event. And that's why I always prefer to do those sort of trades, simply because the potential for profit is fairly balanced with the potential for loss. People often ask this question about, can we make Bet Angel compatible with the Orbit exchange? We can't. It will not be allowed. So we are unable to do that, unfortunately. Run Like a Drain, hello there, is saying the Betfair video seems to have deteriorated since they stopped using Flash. Yeah, lots of people have said this. This sort of goes in hand with what do I use. I tend to go off of Sky, and watch Racing UK and Sky Sports Racing. But of course, it's sort of less critical for me doing pre-off stuff as it is for people who are attempting to do stuff in play. So I sort of sympathise with the problems that you have there. I have spoken to Betfair about it, but I have no perception of if that's going to change or what they're going to do about it. But yeah, my sympathies with you, because I know people have struggled with the Betfair live video. And you would think now in this day and age that you would have a much better quality stream and much faster. I have been sort of campaigning and lobbying for that. But where we go with that, I don't know at this particular moment in time. Are you still trading the US presidential election? I am. It's incredible. It will probably be the biggest market I've ever traded in terms of either the market turnover or the amount of money that I put through it. So I'm stuck really, because it would be nice if they would settle it and I can forget about it. But it would be great if it just goes on for a bit longer, just push it a little bit higher. But yeah, what a fascinating market that is. There's a question on here which I've already answered, which is, do you consider in-play much more risky? Yes, I do. Again, if you're approaching it correctly and you're being selective about what you do, then there's no reason why you couldn't do it. I have a tendency to automate all of the stuff that I do in play. I'm going to put some stuff up on the Academy about in-play, which you will see over the course of the winter that will bear fruit, to give you all of my full thoughts on that. But if, like I said, you've got to make your in-play trading sort of result independent if you can, because if you end up making it result dependent in one form or another, above or below the line, then it's more of a gamble than a trade. But I will do it, but I tend to do it in a very certain way. I'm looking for outliers. I'm looking for situations. So typically in play, most of my in-play automation loses money fairly frequently, but gets the occasional massive win. And some of you would have spotted, I can't remember when it was, but I managed to grab something at 1,000 for a stupendous amount of money this year. And that happens infrequently, but when it happens, that covers more than enough of the potential losses that it's going to make looking for that opportunity. And that's typically what I would tend to do in play. But yeah, I can actually race read really well, but the problem is so can people who are on the course. So they'll always be a few seconds ahead of me, and that's a big issue that I have with that. A couple of questions about the Academy, and I've had quite a few queries about the Academy. The thing to always bear in mind is that because I'm actively trading, it's harder for me to be able to push content out there, and especially at the moment we're unable to run courses here simply because government guidelines say that we can't. And during the winter we are going to upgrade some of the stuff on the Academy as well, and just give it a bit of a refresh, because this is the time of year when I can do that. I can't typically do that in the summer when I'm just full on trading. So we are going to increase the level of content on there. You know, do I experiment with doing some stuff online and maybe doing a couple of individual sort of mini seminars, as it were? I may give that a try, but the problem that you're always going to have with me is that I will always be trading, and therefore you're always going to find it much harder to have a conversation with me or correspondence, simply because that's the priority. And then obviously the software business needs to be run as well, and therefore it's a little bit harder for me to be able to do that. But it's that classic conundrum in that the people that you most need to get the information from are the people who are least available, because they're actually doing it. So it's tough from that perspective. But because of lockdown, we've been pursuing or looking at avenues to do more content online if we can. But there will naturally always be a limit to sort of what I can do. But you know, I'm busy chatting on the forum, so you'll often get my opinion on there, and I'll chip in on conversations where I think that I can add some value there. Callum's saying he said he thinks he's seen the graph where the average number of range ticks. There's a video that I did on in play and pre-off, and it's on that video. And there's quite a bit of detail on there if you want some more information on that. 8bow says, can you think of any markets which are similar to UK Irish racing in play, both liquid and fast price movements? The interesting thing is that when I've been heading to the US, there was a great, I took a picture of it, maybe I'll stick it on the blog at some point, but I was in a bar in Lafayette, which is east of San Francisco, and I went down to the bar to have something to eat one evening, and they had NBA on there, so I just sort of quickly flicked up the NBA stuff, and it was very interesting to watch those markets, and it was very interesting to see that there was some liquidity there. Don't know what it's like now, but some of those markets are quite fascinating. It's just a shame that they're not at the same level that they would be if Betfair was legal in the US. And obviously, because they're in a different time zone, that is what is required to drive liquidity into those markets. But if you look at, one of the markets that I've become quite interested in recently is darts, because darts is sort of like tennis, really, in terms of the way that it trades, and you can apply the same strategies to it. And the liquidity on darts has been growing recently, which is interesting. So I've been quite fascinated by that. There is a question here that is saying, what is the big advantage of using Bet Angel for manual trading over just using Betfam manually? You will get beaten by people if they're using a product like Bet Angel. It's very difficult to trade manually against people that have a much bigger sort of arsenal of weapons, effectively. So my advice to you would be to use any software, really, because you will be able to enhance your trading if you do that. John saying, was that beep another loss at Wolverhampton? No, that was just my Apple Watch pinging at that particular point. There's a question in here about beating account restrictions. So if you are using automation to test a strategy and you don't place enough bets on the Betfair exchange, then they may pull you up for basically reading data without actually doing anything. Betfair will not give us any indication as to what those guidelines are, but I would imagine the threshold is quite low based upon my experience with Bet Angel customers. As long as you're doing something, that's probably the most important thing that you can do, rather than just reading information off of Betfair and running the risk that your account would get suspended. But I can assure you, even if you do stuff relatively at random, you're really more or less going to break even minus commission. So you have got nothing to fear about that. I actually run some automation that all that it does is it places 2 orders in the market at regular intervals and then outputs the results to me. And I do that because I'm interested in the fill rate. And I've been running that on an account for a long period of time. It doesn't really do a great deal, but that account has never been suspended. Morphgam TV says, who is Dallas? Dallas is a very valued member of our team. He was a Bet Angel user. It started posting lots of helpful stuff on the forum and helps us out fairly significantly. So yeah, he is a Betfair user first, then became a Betfair customer and is now part of our team. I'm just going to answer a couple of questions. Actually, Shane's just asked a decent question here, which is how many Betfair accounts can any given user? I have 2, but now I'm only allowed 1. If you generate enough commission and your account managed, you can have more than 1 account. But I know that Betfair have been limiting the number of accounts that they can actively allow individual users. So if you request it or you get in contact with the VIP team, then if your level of activity is high enough, then they will let you have more than 1 account. I have more than 1 account. It's a legacy of where I started, but also I am account managed now. So it's possible for me to run more than one strategy on the same market on a different account. I'm just going to have a quick look at some of the other questions in here. So give me a couple of seconds to just read those. One of them is, how do I know before the race day starts which horse races are likely to attract decent liquidity? And that's quite a good question, because if you there's a video that I do where I search through an individual day. I load up Guardian, load up all of the racing, sort all of the races in one particular set of orders, and then I examine each of those individual markets. But you can sort of predict what is likely to be the highest liquidity, highest turnover race of the day, simply by looking at the prize money effectively. If you look at the biggest race today, turned over, I'm trying to remember, just short of 3 million, I think. Can't remember off the top of my head, but I'm pretty sure I saw a number saying 2.9 or 2.8 on the Betfair Chase. But you could tell yesterday that that was going to be the biggest race, simply because it's got the most amount of prize money. Now, that isn't always the case, and that is because if you have short prices, if the price on the favourite is 2.5 or 1.5, the shorter the price of the favourite, the more money gets bet on it. So if you get this combination of shorter priced favourites and the big race of the day, you get massive liquidity. If you get a really low quality race that's a competitive handicap, that will be the lowest turnover race of the day and possibly the hardest to trade, because to trade effectively, you're looking for liquidity in the market so that you can dump a position if you get it wrong. That's the key message that I would give to you there. Another question, or a couple of questions that have come through on a regular basis. Do you think automation can adequately reproduce the effectiveness and profitability of successful manual trading? What an eloquently asked question. So I have sort of touched on this before, but I think that there are different sort of modes of operation. There are things that automation can do that manual trading can't, and there are the odd thing that manual trading can do that automation can't. But because you've got servants now, you can combine the best of both of those worlds. So if you look at a horse running loose or playing up in the pre-parade ring, you may not be able to pick that up on automation. I say may not because there are things. So like I said to you, if the alarm goes off, then I'll run out of this room. That's automation that's doing that for me. It's looking for key characteristics within the market that tell me that something unusual is happening. So you can pick up on those things with automation. But fundamentally, you're looking at a slightly different approach on either of them and different advantages and benefits to either of them. But can you replicate with automation what you do manually? Yes, you can, because I've done it. But it was a progressive stage. You start with a simple strategy, you automate bits of it, and then eventually the two join together, and then it becomes a completely automated strategy. A question that popped up fairly frequently here was about Dutching, which I thought was interesting, because I thought most people have missed the comments that I've made on Dutching before, because I run a Dutching bot, basically, that's looking for very specific criteria within racing, and it does it on greyhounds as well. But the advantage that you've got when you're Dutch, so let us sort of wind things back a bit here. If you're placing a value bet, you need, this is the chance that it is ascribed to of winning that particular event. When you're Dutching, the advantage that you've got is whenever you're looking at a chance of something happening, there's quite a bit of variability above it. So it's sort of saying, this is the chance, but it may or may not happen within this particular range. If you cover more than one runner, then you capture that value. And especially, it could be, if you see something that's priced at 3s or 4s, and there is value within it, it's still got a fair chance of losing. So by broadening your selections when Dutching, that actually allows you to reduce that variability and capture that value. So I run value bots, but the P&L on the value bot is like this. It's just going around all over the place. So it could be thousands down or thousands up. at any one particular point in time. But by using the Dutching as a strategy, you tend to find it has a much better progression. Okay, it rises and falls, but the equity curve on it is much smoother. So that I've been able to scale that much faster. The limit on that strategy is the amount of money that's in the market. There have been a few questions about AI, and it's interesting because I've been approached by a few people who are AI experts, and they want to try and do stuff. And I'm aware that there are people out there doing this sort of stuff. But my experience typically with people that come from an AI background is they're looking at the markets completely the wrong way. They're asking for the wrong information, looking at the wrong stuff, and they don't particularly have any trading background. And one of the interesting things I think about the markets, or one of the biggest things that I've learned, is the psychology of it, the way that the markets move and breathe, and the way that they behave, and how psychology influences that. And I'd say that that's something that's quite difficult to do with AI. And if AI can do that, then we're all in big trouble, because we're just one step away from it becoming self-aware. But a lot of the people that I've seen that have approached me have been going at it from the wrong angle, and I'm sort of loathed to work with them, because I'm sort of thinking, well, hold on a second here, you're delivering nothing to me and I'm giving you everything. And it's like, not sure that's an equitable trade. But I think where you can see that people are trying to use quite complex strategies is, and this ties into some questions that I had as well, is people have asked me questions like, are the markets harder to read? Do they behave differently from a few years ago? And the answer is sort of yes and sort of no, because if you look at the way that markets develop, they always change over time. You have to accept that if you're not in the market and actively doing something, then you may fall behind it. You may find yourself falling out of favor, or your strategy falling out of favor. So this is why I spend a lot of time analyzing all of my data, because I want to say, when I sit down on Monday, I will look at how I performed this week, and I think I performed pretty well this week, actually, much better than I thought I would do, given the time of the year. But I will compare it to last year, see what happened, did I perform better or worse, and then try and describe and understand how that occurred. So you see little subtle changes in the market all of the time. So I'm not convinced that they get harder, but do they change? Yes, they do. Is it harder for new people to enter the market? Probably, because it's much more competitive and there are more people doing it. But every year brings a slightly different challenge to the mix. Things just change ever so subtly, and sometimes that subtle change can throw out a strategy. So there was a change in the racing markets 18 months, 2 years ago, that knocked out one of my automated strategies. It just suddenly stopped working, and I'm thinking, well, I don't understand what's happened there. So go back, revisit the data, try and understand it, and then identify what you've seen, and then alter the strategy to adjust for that. So when you look at that from a manual trading perspective, you may not get that pure feedback, and therefore you may not quite spot exactly what's going on, but the markets change all the time. So that's one of the things that you have to do, is to try and consistently stay ahead with it. We've got more questions piling up here. So let me have a quick read of these. Give me a couple of seconds while I have a quick browse of this. Do I prefer 10 to 5 minutes, 5 to 2 minute window, or do you prefer last 60 seconds to enter and exit? That's a good question, actually, because there are strategies you could apply to each of those. So if you said to me, hey, Peter, you're only going to trade the last 60 seconds, I would do something very specific there. And some of that would be upon the prevailing liquidity and activity within the market. So, you know, some of the best markets that I like are the most utterly chaotic. You look at the markets, the price is flying around all over the place. It's complete craziness. And, you know, you would typically find that in markets where you've got a limited amount of time to do something on it. So say the previous race is delayed, and you know, meeting's been cancelled or whatever, and just by a coincidence you arrive at this market just as the money is beginning to arrive. The way you would trade that would be very different from the way that you would trade sort of 10, 15 minutes out. But part of that is to do with the velocity of the money within the market. So if you're trading a long way out, you probably use smaller stakes but look for a bigger move. But when you're trading very, very close to the off, you're looking for a small move but bigger stakes. So you're looking at opposite solutions to the same problem. So this is one of the reasons why when I trade during the day, you will get different scenarios, because I have to adapt for every scenario that I see in front of me. Now, if you're starting out, you won't be able to do that because it's all a mystery to you anyway. So the way that you would approach it is you say, I'm looking for this factor, I'm looking for that. It needs to be 5 minutes out. I'm going to exit at a minute out. I want the money to be doing this. I'm looking for this type of trade. And if you don't see it, you just avoid it. You move on to the next market until you see the trade that you're looking for. Whereas the way that I would approach the market is I turn up to the market and I assess what's going on with the market. And it's at that point that I specifically decide exactly what I'm going to do to try and get money out of the market. So it will vary depending upon the window of opportunity that you create. And my recommendation when you're starting out is that you define the window and you look for the opportunity. But as you progress and become more confident, you'll be able to do the opposite. You'll be able to turn up to market and go, this is what's going to happen and this is what I'm going to do about it. Somebody said here, Callum has said, I consider Betfair trading on exchange as arbing on the exchange by inserting a directional bias. Do you think pre-race trading could be classified as arbing? I think you're probably about right there. It is a form of arbing. You're just arbing sort of the intention of the market over a very short period of time, effectively. It's interesting because I've got another question on here saying pre-off trading on horses is quite difficult. And I actually think it depends upon the way that you're actively trading it. Now, I know that I'm experienced, and if you look at pre-race trading, you're going to be right or wrong 50-50 if you just do it completely at random. After all my time and experience, I can get a strike rate of sort of 70-80%, but that still means that I'm still getting 20% of them wrong. But I don't look at that as being a major issue, really, because my baseline there is 50% and I'm exceeding that vastly. I think where people get pre-race trading wrong is they're looking over too short a time period, or they have no tolerance to risk. So when I've watched people trade, or I've seen people trade unsuccessfully on racing, the issue that I'm seeing is that they put a position in the market, it goes against them, and they exit or reverse the position, when in fact the position probably would have worked out already. It's just that they haven't had the time, the patience, or the confidence to let that trade mature fully. So I consider myself to trade quite passively most of the time. I'm looking for general positions that are generally right in generally the right direction, and then I'm letting the market deliver that to me. Whereas I think most people are too aggressive and they jump in and out of the market too frequently, and that's the cause of 90% of those losses, is that people cut it out when it's gone against them, when in fact it may actually just turn and come back in the other direction for them at some point in the future. The best way to overcome that, and to overcome that level of ill discipline, is to actually put a trade into the market, guess which way it's going to go, or consistently put it in one direction, and then just watch the market unfold. And you watch how many times that trade is profitable during that period, and you'll realize that what's actually happening is you're cutting the trade out at the wrong time. That's all that you're doing, and that's often why I think people find it hard. It's purely opinion driven, the pre-off trading market. But whenever you do anything in play, to an extent, in some way or another, it becomes result dependent, and people find that easier simply because, you know, the percentages are higher. But like I said before, it's more balance of profits and losses that you're looking at rather than the win rate, because the win rate can be deceptive. Not all trades are going to be 50-50, especially if you're doing something in play, and also depending upon your target profit as well. If you go for a 1-tick profit anywhere, it's going to be 50-50. But if you're going for a 10-tick profit, your strike rate is going to drop backwards. So it all is totally dependent upon the amount you make when you profit and the amount you make when you lose. So it's the interplay of those two that is most important. There's a good question here actually. and it says, what is the most emotionally traded market? Special events and politics are the two that are driven almost purely by emotion for long periods of time, or by the producer's cut or whatever. And I do trade many different types of markets. I think that's really unusual and quite unique, but it's because I already knew about football when I arrived. I learned about horse racing. First ever bet I placed was on a golf market, and I'm just infinitely fascinated by the way the markets work. So it's a progression of strategies and development of knowledge over a very long period of time. I would recommend that you don't trade different types of markets, because you'll just get confused and it can distract you. You're better off to master one thing, maybe one strategy in one type of market, and when you feel that you've totally got that nailed, then broaden out, because that's sort of more or less what I've done. It's just that I've been doing that for 20 years. So obviously I have skill sets in multiple markets. Guy says a third Guardian nominee would be helpful for Dutching strategies. Keep your eyes peeled for the next edition of Bet Angel. Dan says, what's your volume split between manual and bots? I have answered that question a bit earlier. Let's have a quick look at some of these other things. Andy says, how many moves on a daily basis have you yourself influenced? People have asked me this question frequently, and the interesting thing is my answer is generally not what people would expect, because the only time I ever influence a move is by accident. So pressing the wrong key and using the wrong stake, entering at the wrong price. I may do that by accident, but typically most of my time is spent hiding from the market. I don't actually want anybody to know where I am. And there are many reasons for that. One is that most of my strategy is based upon seeing what other people are doing. That's essentially what I do. So I get a lot of clues from watching the market and understanding what the market's doing in front of me, because, and you may hear it on the videos now and again, I'll say, oh, look, there's somebody at 4.5. Somebody's put a large order down. Oh, he's moved it to 4.3. So either through matched or unmatched bets, you can read that information. You can get a sense of what positions people have. If there's a large market and the position has moved in one direction, and then you start to see unmatched money building up, you can get a sense of where that person is within that particular market. If I see a situation where the price is stuck at a certain level, I may go after that price. I may start taking the price aggressively on the basis that I think that it's about to break in one direction or another. But in terms of my general trading, I'm actually trying to hide from the market. So I believe quite firmly that I'm not bigger than the market. The market will do whatever it wants, and my role really is to work within it. So I try not to influence it. I'm always trying to hide and be less obvious to where I am actively within the market. Tom says, if you take away horses and tennis, which is your next best market to trade? That's quite an open question, really, because it's not saying which is the most profitable, it's saying which is the best. It probably is fresh in my mind is what I've just done on the US Masters Golf. And I find golf quite easy to trade. That's the wrong sort of word to use. I find it the logical approach to golf I like. But the problem with golf is that I only really trade the 4 majors. Those are the only markets that really have the liquidity to operate at the level at which I want to operate. But I do a bit of greyhounds. But again, I've pushed that down the automation route because there are hundreds of races a day, but I can only ever yield small results on that. So that's a strategy that's best automated. I would never sit down and trade greyhounds manually, apart from the really big races. But yeah, when I look at tennis and football, I sort of dip in and out of those as I see appropriate, basically. And I do know football inside out, and it's a high liquidity event with a large number of occurrences. So I quite like football from that particular perspective, but it's really driven by the opportunity, the liquidity, and the availability, really. And then I'll switch and do different markets based upon what I see in front of me. But that question varies depending upon whether you say most profitable on an individual event basis or easiest to trade. They all vary because football by default is going to have very highly variable results, and it's just something that plays out over a long period of time. Whereas, you know, the reason for getting involved in horse racing was because there was so much of it, and I could produce consistent results that would, you know, be my bread and butter, basically. Obviously, a Liverpool fan here saying not trading the Spurs game. No, I'm not. I'd be interested in knowing the score if you could put it up there. 8 says, can you think of a trade which I love these sort of questions. Can you think of a trade which has got you particularly excited as it unfolded this year? Because that digs a lot deeper, I think, into the trading psyche. And I'm trying to think of a trade that I particularly enjoyed this year. I would probably have to go back to Cheltenham this year because again, the US Masters, I thought I traded it pretty well this year. But the Gold Cup at Cheltenham, I pretty much nailed on the nose this year. And the interesting thing about the Cheltenham markets, if you look at the day-to-day markets that we're trading at the moment, this time of year, the markets are a lot weaker and the volume comes in later and they're sort of dispersed over little periods of time. So as a consequence, the volume rises and falls and rises and falls according to what's going on within the markets. But if you look at a market like Cheltenham, the volume starts to arrive there when the previous race has finished at Cheltenham. So you get half an hour to basically build up a position and exit that position over a period of time. And if you're looking at something that gets me excited and gets my heart racing, it's those sort of markets, because I've got half an hour, I've got sort of, you know, 6 times longer on those markets than I would have on a race like today to do something really special. So those are the markets that I really, really enjoy getting sort of stuck into. And I can't remember what I did on the Derby this year. I'm trying to remember if I did a decent result on the Derby. But I'd probably say, especially because I performed well at Cheltenham, I think that's the thing that sticks out for me mainly this year. Steve said, could you teach a complete novice trader to trade, i.e. like turtle traders? Yes, because I've done it. I have been teaching my children to trade, and I think that gives you really valuable insight into how people learn and what they learn as well, because I'm pretty confident that they would be able to trade okay, not at the same level as me. But the problem that they would probably have is the development of new strategies, because they're not at the stage where they could reasonably, sensibly do that. That requires a whole different level behind it. And they probably need to be more engaged for that. So I think if you have an interest in a sport, if you have a real deep interest in trading and all of those things, then what tends to happen is you can develop ideas out of that. You need that passion and enthusiasm to do that. And that's the hardest thing to engage. It's okay to teach somebody how to trade and make a bit of money, but if they don't understand why, how, or how they can develop as a person, an individual, or move it forward from there, then ultimately that will just fade away. So I think that process takes a lot deeper. Can you teach people how to trade? Yes, you can. But I think that the problem that you have is there's a whole psychological aspect to that side of it, which you have to explore as well. And that takes a little bit of time to understand exactly how the person thinks, how they behave, and then to be able to accurately reflect and put that into the trading process. And I think that's one of the biggest things. If I sat down with you over the day, you'd probably have a billion light bulb moments and you'd be thinking, oh my God, that's where I've been going wrong. But could I turn you from nothing to a really competent trader in a day? Probably not, because the journey is longer than that. And part of that is because I don't know you as a person, what influences the way that you behave and act. And that's one of the things that you have to overcome. So we did have somebody in the team once that helped me out for about 6 months on a particular project. But he was I'm not going to mention his name, but he was the most useless trader ever. And he will admit it as well. I'm not being nasty here. But his tolerance for risk was minuscule. So he would panic every 5 seconds something went wrong. And it would be like, no, calm down. Just take your time. Look at what you're doing. This is the process that we agreed. This is what you should be doing. This is when you should be doing it. Off you go and do it. But he would be paralyzed by fear almost. And he just couldn't do it, which was interesting. But nonetheless, his trading career didn't last very long. But he was fascinated by it. But I think he'd been too intellectual in the past, and therefore he couldn't rationalize the concept of taking risk, when you didn't know the outcome. And I'd say that's one of the biggest things that you can learn when you're trading, is this ability to look at something and go, I don't know what's going to happen. I think I know what's going to happen, but it's okay if it doesn't work out. I think that's the biggest leap that has taken place for me, was being okay with that and being able to cope with the rejection by the market and being able to come to terms with sort of taking a risk even though you didn't know what the outcome was. It's like sort of jumping off a cliff into some water and you don't know the depth of the water. Now, I would say that that is quite risky, but you would take into account other factors. But that's the sort of feeling you get when you're trading, especially when you start moving up to a much higher level, because you're using large amounts of money overall. You're taking quite chunky positions that could result in big negative results if you don't do it correctly. So you have to be able to feel the fear and do it anyway. And I'd say that's one of the things that I've learned, is it's really changed me as a person, of being able to take risk, because part of the process of trading is doing something without knowing what the outcome is likely to be. And you have to overcome that. And some people really struggle to do that. So you have to practice that. You have to drill it into yourself. You have to learn that it's okay to make a loss. It's fine. It doesn't matter. And that's all part of the process. This is a great, I love this question here. Racing 5312-001 said, would I make money if you weren't in the market? That's a great little question. Somebody would probably fill my shoes, to be honest, I reckon. And we may be at strategies at opposite ends of the scale of things. So always remember that if you're a trader, you're probably trading against other traders, but probably where most of the money is coming from are traditional gamblers and people who don't put any effort into what's going on in front of their eyes, or they're not developing any strategy. I almost did a video on this other day, but if you look at the market from a broad perspective, the mass market are people who just can't be bothered, basically, or are looking for a shortcut. And then if you're above that, you're effectively making money from the tier below that, effectively. And then as you go up that triangle, you get to a smaller and smaller number of people. And probably at the top of that ecosystem are probably big syndicates, people with information advantage, all of those sort of things. But there are a very small number of them making little bits from large numbers of people. But there seems to be a regular churn of people who come into this expecting that it's going to completely transform their life for no effort. And then they suddenly realize, in fact, you know what, you've actually got to work for this. And they just drop off after, losing a little bit of money. So you need to progress yourself up that triangle, effectively, through that ecosystem. And you do that by thinking things through, being a little bit better, perhaps using better tools, getting the psychology right, and progressing your way upwards from there. So would you make money if I wasn't in the market? Probably not, because somebody would fill my shoes sideways rather than vertically, I should imagine. Callum says, do you take any notice of bookmakers or tipsters? No, I don't, is the short answer there. I don't look at that at all. Does the distance of the race influence how you trade it? No, unless if you're doing in play. Do you use ELO ratings? No, I tend to model, but I don't tend to use ELO ratings. Tom says Spurs 1, Man City 0. As do a few others. Thank you for that. Callum says, when trading horses pre-off, do you consider the going? I gave an example a little bit earlier on the live stream, so you may want to go back and have a look at that and read all of the dialogue that I had around that particular example, because I gave a really good one today on the future race. When somebody bets a huge amount of money on a particular result, makes the opportunity. If you're looking at a pre-off horse racing, a large order in the market doesn't necessarily mean that initially it may make the odds drop significantly, but longer term it may regress. So I wouldn't necessarily go against that. I think that if you get a set of large orders within the market, then you can consider that somebody really wants to get on board with something. I have done videos on this before. But if you see just one large order, it doesn't really mean much overall the scheme of things. If the market goes against you, how many ticks do you allow it to close at? I've done a video on looking at stop losses. So the way that I frame the market is I don't have an arbitrary number that it goes against me. What I will do is I will say, this is where I expect the market to trade. And if the position starts to go against me at that particular point, or it breaches that lower level, that's when I dump the position. So there is no arbitrary amount that I let the market go against me. There's a couple of questions here saying, are we going to bring in features for other exchanges? That all depends. Bet Angel is only available on BetStack, and I make more on BetStack because the product is free. I make more on BetStack than the product generates in revenue. So it's driven by revenue, and as a consequence, that's the limiting factor in terms of whether we adopt other exchanges. The product has to pay for itself. We're pretty much at full stretch with the small team that we have around Bet Angel. So unless we get money to able to fund those projects or bring on new people, it's very difficult for us to develop for other exchanges. So just being honest there, basically. So we do have Bet Angel for BetDAC, but for the other exchanges, it's probably unlikely at this moment in time, unless if something dramatic shifts. Maybe if a new exchange opened up, which had massive amounts of liquidity, then just my interest in it would probably push us down that development path, because I wouldn't mind taking a loss on that to be able to actively trade it. But yeah, it's basically a commercial consideration, really. We're at the limit of what we can do as a team, and we'd have to bring in new people to be able to develop for more platforms and more exchanges. Nico says, why are you missing out on trading Wolverhampton? Because it's rubbish on a Saturday evening, and I'm unlikely to be able to make any money. And I've got automation trading on it anyway. So I'll have a look in a second and find out how that is doing. How was the best way to prepare scalpers to, after suffering losses? I think that probably, if you look at, I've always had this model in my head around psychology of imagine yourself being a person who was having to do cold calling via a telephone. If you were able to cold call people, the problem that you have when you're cold calling, I get loads of cold calls. You should be here one day when I take one. It's quite amusing. But the problem you have when you're cold calling is you probably have to call 20 people before you get anybody that's even remotely interested. And I think that when I was looking at how can you cope with that psychology, because can you imagine you cold call somebody and they just go, no, I'm not interested, or something slightly stronger than that. So it must be absolutely soul destroying to go through all of those calls to just wait for that one call where somebody actually is interested in the product that you're attempting to sell. And it's sort of similar, I think, when you're trading, because I went off and I looked at the cold calling business, because I thought, well, how can these people just sit there all day, and it's all automated nowadays, just getting rejected constantly? And the way that they're trained is they basically say, don't look at it as a rejection, just look at it as another step on to when you're going to get that success. And I think that's almost what you have to do when you're trading and you take a loss. You sort of say to it, well, it's okay, because I was expecting that, and I'm just waiting for the next opportunity to come along. So I think from a psychological preparation perspective, that's probably how you should view it. So I go into every day expecting to make money. I don't expect to lose money over the course of the day. But what I don't know is how that's going to happen. It could be a string of profits and then some nasty losses, or it could be some terrible losses at the start, which I gradually claw back during the day. But I always know, and I always go in with the expectation that I will make money. And if you look at things over the course of the week, what tends to happen is Mondays are quiet, Tuesdays are quiet, Wednesdays pick up, Thursdays, look quite good. Fridays are generally a 2-day meeting, so I'm beginning to pick up some momentum. Saturdays, are the day of the week. So even if I get off to a bad start at the beginning of the week, I'm not panicking or feeling rejected. I'm just sort of thinking, oh, well, could have done with a better start. So yeah, you have to you can get some massive results, some massive wins, and you can get some massive losses. But really what you're thinking and focusing on is that line in between. You're not letting either influence your next trade. Just because you did a really good trade doesn't mean that you're going to do a great one next time. And just because you had a big loss doesn't mean that you're going to lose money next time either. So you just have to keep plowing along that path and let the two balance themselves out over time. Callum says, do you think it's better to have, it keeps jumping, every time I'm reading it, it's jumping up. Do you think it's better to have the correct strategy executed incorrectly, or a wrong strategy, but with good execution? I think it's better to have the correct strategy badly executed, because you can improve that. Many people have completely, I watched a video, somebody sent me a video the other day, and it was somebody trying to trade pre-off, and he got into the market. He was in the wrong race. He got into the market at the wrong time with the wrong stake on the wrong runner, did the wrong trade, but he actually managed to make a profit. And the problem was, that was the worst thing that could have happened, because everything about the trade was completely wrong. The only thing that happened was, on this occasion, it turned out to be a profit. But if I sat you down and told you all of the things that you should be looking for, that video is the complete polar opposite of exactly what you should be looking for. And yet he got away with it. And he will repeat that trade endlessly and wondering why he's not making money. So yeah, definitely. It's better to do the right strategy but execute it badly, because you can undo that and you can progress from there. Somebody asking, will this be uploaded? Yes, it will. Paul says, I did cold calling 30 years ago in London and agree. Even after 100 rejections, I always knew I was going to end up with the one that would make up for the negative reactions. Same with trading. Spot on. And it's I was trying to look for a proxy that would align it to trading, and that is the best proxy I can find. Lots of people have asked this question. Thomas has said it again here, and we have had this question a couple of times, which is, do you see trading becoming fully automated and no manual trading? I think it will probably be a hybrid. If you look at the way that I trade now, it's quite different from how I traded a few years ago. So when I enter the market, I can trade manually, fine, that's no problem at all. But there are little elements of it that are automated, because I know that that's going to give me an edge from an execution perspective. People can see an opportunity, but when I place that trade in or out of the market, what it's doing is it's giving me the ability to just do it a little bit better. And that adds up over the course of the year. Over 30,000 markets, just a tiny percentage allows me to squeeze just that much more out of the market. So I think manual trading will always be around, but I feel like a sort of a robot, really. I feel like a cyborg. I've got other things bolted onto me now that just make me just that much more effective. And I think it's inevitable that the market is going to be heading slightly the entry or the exit of a trade. Dale says, outsiders score more often than you would think. Thank you, Dale. I wasn't aware of that. My guitar love, that sounds interesting. I'm hoping that's something to do with playing the guitar. Says, how long from post would you usually find yourself trying to do a swing trade? If you're looking for a trend within a market, you want to start out as long as you can, as long as the liquidity is there, because you'll get a bigger move the further out you start. You can't really get a very big move in the last 60 seconds or so. So you probably, the further out you go, you should be able to get a much bigger move. We've got Shadmo from Shanghai. Welcome. If you're using a VPN to connect to Betfair, you probably want to use a VPS, because the VPS will be hosted natively in the UK, and you'll be able to get roughly the same speed with a little bit of latency on the connection as somebody in the UK. LV says, will traders who use Python machine learning overtake those who only use Excel? No, not in my experience. I have talked about this a little bit earlier. Nothing's impossible, but in my time, I don't use machine learning. I model markets and then anticipate how they're going to behave. And that seems to do a better job. I'm not saying it's, you know, that there aren't people out there doing well with it and stuff like that. But the longer I go on, the more confident I get that I know exactly what I'm doing. Couple of comments, nice comments. Thank you, saying I'm enjoying the live stream. Will we do some more? I think so, because this live stream has actually been going on now for 1 hour 50, which is much longer than I expected. I thought if I capped it in an hour, that would be probably adequate. But I think what I wanted to do with this live stream was experiment with this setup. I've got another setup that I think probably has a slightly better quality camera and feed now that I've got the massive internet pipe into this building. So I want to do another live stream on that. So I've got a direct comparison of the two, but also I think maybe what we should do is narrow the topic down. So if I do a live stream on a certain thing, we can talk exclusively about that. I think that will give you more value in a shorter period of time. Most of the live streams that I've done sort of quite broad and we meander all over the place. And I think that's probably difficult for people to watch back and for people to stay with. So I'm thinking maybe we just do very specific ones on specific topics or discuss things where you can ask much more deeper questions rather than broader ones. And I'm thinking that may be the way to do it. But I do want to experiment with the equipment as well, because I've got 3 or 4 different bits of equipment here that I can use. This is the most basic setup, and I think I can probably improve on that. And also, if I create a little live streamy desk around me, I could probably start to bring in imagery and other items like that, perhaps. So I think maybe that would be an option for us. Mark says he's still involved in financial markets. Yes, I am. One of my hedge fund friends from the US has moved to Europe, so I'm probably more involved in it than I have been for a few years. That's still quite an active part of my life. That's why my life is so damn complicated, because I've got so many plates to spin all of the time. Jack says, have you used Parallel Desktop? Yes, I have. I've got a MacBook. This is a MacBook. And I use Parallels to run Bet Angel on it. It works pretty well. Anyhow, it's 1 hour 52. That's longer than I anticipated we would spend. So what I will do is I'm going to go back and look at some of the questions. And I will go back and probably answer some of the questions specifically on a separate video. But I am going to do some more live streams as well. And we're probably going to narrow the subject a little bit so that we can look specifically at some topics. You can ask some more in-depth questions and I can give you some more detailed answers. Some of these general live streams are quite broad, so I think you would probably benefit from doing that. But yeah, we must move on a bit now. And I appreciate everybody coming and having a look and asking some questions. I hope that I was able to give you a little bit of value in the time that we spent here this evening. But I look forward to seeing you on the very next live stream. Thank you very much for coming. I hope you have a good weekend.